Horlicks Network 18, Mission Poshan, Bhavishya Roshan.
Okay, welcome back. So 50 points lower on the Nifty. The Midcap index is down 225. That's about 1.25%. It's gotten a little better over the last, 15-20 minutes. Manisha is joining in on the conversation with the roundup of commodities and currencies, and we're talking about specifically sugar, with the expectations running high in terms of what the government can do. Manisha, morning.
Morning, Prashant, and thank you so much for that. Well, absolutely. You know, it has been a very volatile sector. One day of gains because the markets are expecting a lot, and another day of decline as the market understands that there's not so much of an immediate impact coming in from this one. This is exactly how the trend has been for last many days. Today, of course, is a very good day because there are expectations since yesterday evening on some communique that has been going around by sources on what really could be coming in the cabinet in this week itself. You know, what you really need to understand is on what the government already has doled out in sense of measures. To begin with, you already have import duty at 100%. So clearly there is no imports coming into the country. The export is something that the government has completely taken off duty on. So industry actually is encouraged to export at this point in time. Government has made it mandatory to export 2 million tons of sugar, and that had happened a couple of months back. But out of that, we understand that only 1 lakh ton of sugar perhaps has been contracted, not even that, because there are so many caveats, so many boxes to tick before you can export that, especially with some retrospective clauses as well, that the industry has not been, has been able to take part into that. The other thing what the government really has given out is 55 rupees per quintal of a production-linked subsidy to the cane farmers. Now, the point also into that is, and while of course it constitutes 1,500 crores of the total package that the government is talking about right now of the 7,000 crores, the point is even that hasn't been done because that would go to only those mills who have again ticked all those boxes. So clearly the mills haven't been able to export. They haven't been able to hold on to the kind of quota that they were given in the month of Feb and March. So even that hasn't been able to be dispersed. Now, what the markets are anticipating is that you are looking to the government to create a buffer stock of nearly 3 million tons. That would mean nearly 1,200 crores of yet again coming out from the government's kitty. The other most important and a long-term measure clearly is the ethanol production, pricing and the interest subvention that the government is talking about here. So 4,400 crores is your breakup coming out of that. Now, important point in this as well is that when you talk about the ethanol subsidies, etc., the loans is something that the mills will have to go to the banks and start taking. Clearly, the banks, with the kind of state that they are in and with the kind of state that the sector is in, you're not looking at too much of a loan, a disbursement coming in for this sector. So this is also something that's a bit of a concern that the industry looks at with right now. The other couple of things, of course, are going to be fixing up of MSP for sugar at around 29 rupees per kg. Now, the cost of production clearly comes at around anywhere between 32 to 34 rupees per kg. So this is yet another figure that the market is not too happy with. But with the kind of situation or condition that the industry is in, any measures, any push, any help that the government will come out with is something that would be of great help, especially when you have nearly 20 to 20,000 crores of arrears lying on with the industry and the sugar prices standing on where they are.
Manisha, just, sorry, before you bring in Kunal, the first point you mentioned is a buffer stock, right? 3 million tons.
That's right.
30 lakh.
Yeah.
So this is part of this MSP? I mean, they'll buy this.
So the government is not going to buy this. The government is going to tell the mills to keep it aside and the government will pay them the cost of holding it. Is how it will work.
So in a way buying it. I mean,
So the cost of holding this perhaps would be 1,200 crore rupees as government sees
Which is at this MSP. That's what we're talking about, or that is separate?
That is separate.
That is 29 rupees, that is separate.
That is separate. That is for the rest of the sugar. 3 million tons will be taken away from the market immediately as soon as government decides there's a buffer stock being created. So you still are holding that 5 to 7 million tons of an excess, out of which 2 million tons perhaps is something that you're looking to export, but only if you tick all the boxes, which the mills, I'm assuming, will not be able to do.
The quota was 3 million earlier for exports.
2 million,
2 million and only 1 lakh tons has been exported.
That's right.
So there is like 19 lakh tons left. Go on.
So, yeah, those are those decimal numbers clearly. And even as I said, even as you are expecting the cabinet to clear all of that tomorrow, there is just too many loopholes into this right now to tackle too. But of course, as we come to that tomorrow. But Kunal, thank you for joining us. First of all, what is your sense on sugar? Because the prices, of course, have been volatile, and we also have seen, while the stocks continue to react on a day-to-day basis, how is the whole, the package, the valuations, the maths looking to you?
Well, it's like you rightly pointed out, it's very confusing at this point. But the fact is that at any moment, any clarity will come as the moment the government announces some subsidy or some package. The moment that is coming, at that time you can take a convincing call that where the sugar is heading. Because under the current fundamentals, it doesn't seem that the sugar prices are going to move up under any circumstances, and even international sugar prices looks very weak. So at this juncture, I think much depends upon what the government is giving to the ailing industry and what is the impact of that on the sugar prices. That needs to be seen.
Yeah, you know, me and you, Kunal, have talked years and years about sugar, and I should get that production figures of last many years on the screen, really. Since 2012, we've seen the production in 20s, higher and lows. 31.6 million tons of sugar output is what we already have done. And the estimates are that the next year is also going to look at higher sugar prices. So even with the kind of measures that the government is taking, would you say that this year and the next year, it is going to be a difficult time for the sector?
Yes, very much, because I think that there are no triggers for sugar prices to move up significantly from here until and unless we see a significant drop in production in key producing areas. Till then, I think that there is no relief which is going to come. So generally, the lower prices tends to lead to a lot of a shift in acreage, but the other crops also are not so lucrative. So I think it's going to be difficult 1.5 to 2 years for the sugar industry.
Okay, all right, Kunal, as well as Manisha, thanks very much for joining in and giving us all of that perspective. So tomorrow is going to be an important day for all of the sugar stocks in anticipation. All of them are just about running higher. I just want to point out that we've recovered all the way back to 10,600 for the Nifty. It's a marginal recovery, but even for the mid-cap index, there's been some amount of buying at lower levels. Good time to get Ashwini to talk about the technicals of the market. Then, Ashwini, hi, over to you then. What would you recommend? In terms of the index, what would you do? Would it be a buy on dip strategy based on what you're seeing on the screen, as well as stocks?
No, this is a good intraday rally to sell into. So, you know, the kind of momentum we are seeing on the downside, it won't be very easy to sustain any sort of rally, whatever, whether you have global cues or you don't have global cues, because, you know, if you have 7 stocks declining to 1 stock advancing, it's very difficult to construct any kind of rally. Often, you know, Reliance or some other large stock is just holding on to the market, but it can't really reverse the trend. So particularly on Bank Nifty, Nifty, etc., I would think it's a good intraday rally to sell into, and finally the selling will resume again. Having said that, I think Raymond is a sell with a stop of 950, target of 920. ACC is a sell with a stop of 1275, target of 1240. And now tech stocks are also coming off. So TCS is a sell with a stop of 1770, target of 1650.
Ashwini, short on time, so we're going to wrap up this conversation, but see you in about an hour. Appreciate you joining in with the perspective on markets and trades. We'll take a very quick break here with news that the market is recovering now. So, you know, from 11, when we were down 60, we're down 37. So there is a pullback which is underway, which is 25 odd points or so already. So there is, I mean, real recovery underway. By the way, so losses have halved from when we started at 11. As I said, there was a 60-point cut. Now there's a 30-point cut. So there is a bounce. T.S. Ananthakrishnan is CEO at Verenium Capital Advisors. He's with us on the show right now. Another thanks very much. Good morning.
Good morning.
So, I mean, let's just dive straight into the problem area, which is mid-caps.
Sure.
What's causing most of this heat and pain? Many are pointing to this additional security sort of surveillance measures, the ASM list,
correct,
as one reason.
I mean, broadly, I think you can give you know, whatever reason you want to, whether it be the fact that the valuation between large and mid, there was a huge premium at the start of the year. So our take was fairly straightforward in the sense that if you look at mid-cap index, and most of the mid-caps had done extremely well last year. They were up anywhere between 55 to 60% on a broad index basis. And and the valuation metric, the premium with respect to large cap was north of 1.5 1.6. Now that premium has come down to 1.28. It's still a significant premium as far as the valuations if you look at the mid-cap index. So broadly, if you see Nifty at what about, it's about flat to 2%, and if for this year we have fallen by 12.5% in the mid-cap index compared to a 60% move. I think it's par for the course. So, you know, a lot of these measures, whether it be in terms of the whole mutual fund reclassification or the ASM measures, I mean, they are all incidental, but I think it's just that the valuation was quite, the valuation premium relative to large cap was out of whack.
But how are you selecting mid-caps now?
Now, I think this affords a lot of opportunities. I mean, a lot of good names have come off, you know, dramatically. Around 25 to 30% falls have happened in many of the names. So I think it's a stock-specific approach that one needs to take. We see opportunities in sectors which everybody was in, but have fallen. So names, the NBFCs like you know, Indiabulls Housing, other NBFCs. Though Indiabulls Housing wouldn't come under the mid cap, but there are other mid cap NBFCs which have fallen and give us quite a bit of opportunity.
But that's only on the NBFCs. There are a lot of other stocks which have corrected significantly. The PC Jewelers, the Manpasands, the KEIs today.
Correct.
Qualities of the world. And a lot of people are experiencing a lot of pain in their portfolios.
I completely agree with you.
So how do you assess an opportunity within these?
So the way we are looking at it is you look at quality names where ROEs are looking good. You know, the way we analyze within our portfolio, we're looking at an ROE of greater than 20%. Earnings growth is still looking good. You know, EBITDA margins are still expanding. And there are opportunities in the same space. So there are names which are there, even in cement, where cement prices have come off. There are names which are there in auto ancillaries which have fallen. Case in point is a Bharat Forge, right? So there are names which are there in even consumption stories which have fallen, despite the fact that in the last 2 years, last quarter was the first time that actually consumption improved, where the quarterly numbers and volumes have started to expand. So from that perspective, you know, the way to look at it is as long as earnings growth is there, ROEs are being generated, and you are getting at a much better valuation than what you were getting on December 31st, and it's a bet that you should take.
So what are you buying?
Overall, I mean, I think when, you know, the way we structure our portfolio, you know, 70% of the portfolio you know, kind of plays into secular growth stories. So essentially, where
HDFC Bank,
HDFC Bank, and despite anything else, you're seeing earnings growth of north of 20%. Though valuations were, you know, especially in the auto ancillary space, valuations were much elevated. Now you're getting opportunities in the NBFC space, where you're looking at the housing finance companies which were at 4 times book. Now you're getting opportunities because of the fall which has happened in the recent space. So we are looking at some of those opportunities. Cement, which has fallen dramatically because of an increase in capacity and announcements of a lot of capex which is being done by cement companies, you know, which also affords opportunities in you know, providers of capacity for these cement companies. So there are players who are in the equipment manufacturers, who are in the tilling, you know, wheelbarrows, and all who are essentially into equipment financing, also where you get opportunities. So those are places that we are currently looking at.
Okay, all right, we're going to leave it on that note. Thanks very much for joining in with your quick thoughts on the fundamentals of the market. Just want to point out stocks such as Idea as well, down 7% today. Just Dial, which has lost around 7% as well. So not just those high beta kind of stocks declining, but you're seeing these kind of names seeing significant pressure as well.
Look at the Nifty, which is now 40 points off the starting point. I mean, when we started at 11, we're off 40 points from there. So there's this big recovery there. We take a very...
Welcome back. Well, the stock which continues to be in focus today has to be Biocon, after Biocon and Mylan's application for biosimilar pegfilgrastim, which is basically a cancer drug, was approved in the US. So remember that this is the second biosimilar which has been approved in the partnership that Biocon as well as Mylan share for a number of biosimilars in the US as well as across the world. We spoke to the managements of both companies, Biocon as well as Mylan. Let's listen in to what what they had to say.
For Biocon, this is a huge milestone because we are the first to be approved as a biosimilar. And obviously, we believe that there is a large opportunity and have the first mover advantage as well. FY19 for sure. I think, there are different assessments made by different, analysts. But suffice to say that it is a very large opportunity. And I think Mylan feels very confident that being the first mover, it will have a good advantage, and they will obviously make every effort to garner maximum market share.
It's a huge moment for Mylan Biocon partnership because, more importantly, it validates our science. It validates our commitment to affordability and accessibility. And we are very excited to get another first in U.S. market. We are looking forward to bring this product to the market, launch this product in the market in the following few weeks. And as far as the size is concerned, it's going to be different as compared to the commodity generics.
Okay, so we have a 60-point recovery now, so we can, flash the Nifty quickly. I mean, it's 3 points away from turning green. So this is quite remarkable, the way the market has come back. And maybe we could look at the HDFC Bank stock. The low when we started was about 2,020 rupees. It's come up to about 2051. I'm looking at June futures, but I mean, the cash price would also reflect that, yeah, there's a big recovery. That's 10% of Nifty, by the way. So it has a huge say in how the index itself moves. Advanced decline, there is no recovery. 1,800 stocks are lower on the NSE compared to 300 stocks which are higher. We take a break. We are back with more on the other side. Okay, welcome back. So the market, of course, is recovering and then is selling off again. We came to within 3 points of going into the green. We're down 18 or 19 points now. So there is one turn down again. Sonal Sachdev is here in the studios, and he's going to tell us a little bit about what this ASM, these additional surveillance measures which SEBI has imposed, really mean, and what do they mean for investors, for brokers, margins, and that kind of thing. Sonal, morning.
Morning, Prashant. Prashant, the stress in mid-caps is largely because of the advanced surveillance mechanism. And the name says it all. It's, you have mechanisms that are available with exchanges to curb volatility and extraordinary price movement. This is an additional sort of mechanism that has been introduced. SEBI and exchanges take the call on the objective parameters that will be used to identify stocks where there has been exceptional movement or extreme volatility. And presently there are over 60 stocks here. You have the likes of HEG, you have Dilip Bilkon, you have Radico Khaitan. This is not telling on the fundamentals of any of these stocks. It's just that they've noticed extreme volatility. And as part of this sort of mechanism, there's an imposition of a 5% circuit filter on these stocks during the period that they are under this, and the list is reviewed bi-monthly. There's also an additional 100% margin which is imposed on trades in these stocks, and that is a huge volume and trade dampener, because it's almost like saying you're buying the stock completely, paying 100% upfront. Now, people who would normally trade, and brokers, etc., who need to provide for margins, I mean, it's a lot of money that you're putting to trade in the stock. The simpler thing would be, get out of, the stocks in this category and trade elsewhere. So, I mean, it just creates a lot of pressure. And we saw many of the stocks on lower circuit filter today. So that's one pain in the mid-cap.
The thing which would squeeze Sonal, though, is not the 5%, because the exchanges change the circuit limit anyway for a lot of stocks, but the additional margin, right? Full margin, essentially.
Yeah.
That's going to hurt.
Yeah. So, I mean, you have a flexibility of moving within 5%. I mean, normally, how many stocks do you see moving more than 5% on a day? Sure. But the 100% margin is the real killer.
Okay, all right, Sonal. Thanks very much for that. Just want to point out HDFC Bank have really recovered 18 stocks in the Nifty, which are in the green as compared to 9 stocks when we started the show. So the intraday recovery is here, and let's see whether it stays. With that, it's a wrap on Trading Hours. Stay tuned. Halftime report up next.